Moving on, news just coming in. IndusInd Bank has reported a 2,328 crore rupee loss in the fourth quarter. This after lapses in its derivative accounting came to light. The bank has also reported another suspected fraud of 173 crore rupees in its microfinance business. The management is addressing a conference call. Let's cut across live.
Again, the board has also taken a very serious view with respect of staff accountability across levels to reinforce the governance and compliance culture, and is in the process of taking actions for staff accountability. Number two, additional rigorous review. In addition, in light of the derivative accounting issue, the board has also worked with the management and the statutory auditors to undertake an enhanced and much more rigorous review as part of finalizing the financials, including thorough reviews by the internal audit department of the bank. As part of this exercise, the bank has identified the following significant matters which have been appropriately accounted for in the financials for quarter 4 24 financial year 24-25. Number one, microfinance portfolio. The reviews identified that over the first 3 quarters of financial year 24-25, there was incorrect recording interest income and fee income. The review has also identified the misclassification of certain microfinance loans which have resulted in under-provisioning and non-recognition of NPAs aggregating rupees 1,885 crores. The bank has addressed the underlying cause and is in the process of taking actions for staff accountability. Other matters. As part of the review, it was also noted that there were certain unsubstantiated balance in other assets and other liabilities accounts of the bank, and that an amount approximately of rupees 760 crore has been incorrectly classified as interest income instead of other income. Based on review of all these matters and reports received by the board suspects the occurrence of fraud against the bank and the involvement therein of certain employees, having a significant role in the accounting and financial reporting of the bank. Accordingly, the bank has directed necessary steps to be taken under applicable law, including reporting to regulatory authorities and investigative agencies, and to also fix accountability of all persons responsible for these lapses. The financial impact absorbed in quarter 4 financials in FY 24-25. The financial impact of all the above has been fully taken in the audited financial statements of the bank for the financial year 2024-25. The bank's approach towards financials has been to start FY 25-26 on a clean slate without carrying forward any of the past issues. The bank has thoroughly reviewed all the lines of accounting and has taken a conservative view in some of the accounting treatments. This has reflected in a few one-offs versus the business as usual run rate, which we shall delve deeper in subsequent sections. The bank's balance sheet remains healthy after absorbing all these changes, with a capital adequacy ratio of 16.24%. I repeat, capital adequacy ratio of 16.24%, a provision coverage ratio of 70%, and an average liquidity coverage ratio of 118%, with an excess liquidity of rupees 39,600 crores. The liquidity remains comfortable in current quarter as well, with an average LCR of 139% in the first half of this quarter. I would now refer to the leadership transition. Following the findings of external review announced on 27th of April 2025, the bank's CEO and Deputy CEO had resigned from their respective roles thereafter. The RBI has advised the bank to submit proposals for appointment of the new CEO for RBI's approval by 30th June 2025. The board is at an advanced stage in the selection process and is confident that the recommendations will be submitted to the RBI in advance of the timeline prescribed. This will provide strong leadership and management stability at the bank. The board is determined to identify and expeditiously induct strong leadership with right competencies, strong ethics, and the ability to build and scale a robust franchise. In the interim, and as approved by the RBI, the Committee of Executives, which is Anil Rao and Soumitra Sen, is entrusted to oversee the operations of the bank. The Committee of Executives is guided by an oversight committee of the board comprising of the chairpersons of the board, the Risk Management Committee, the Compensation and Nomination Committee, and the Audit Committee of the board. The Board of Directors and the management team is committed to ensure a smooth transition. I would now like to reinforce the ethos of governance while executing the growth strategy from here on. The board is working with the management to bring in a cultural shift towards achieving high standards of ethics and governance. We want to build an environment of open and honest communication with all the stakeholders, prioritizing long-term sustainability over short-term achievements. Compliance with extant regulations in form as well as spirit is non-negotiable. A one bank vision, breaking the silos by laying a strong foundation would ensure avoiding repetition of such episodes, providing uninterrupted execution on the bank's strategic growth objectives. I will now hand over to Soumitra Sen to take you through the highlights on individual businesses. Soumitra, over to you.
Yeah. Thank you, Chairman. Let me start with the vehicle finance, one of the business pillars of the bank. Our vehicle loan book at rupees 95,595 crores grew at 8% YOY and 2% quarter-on-quarter. The disbursements for quarter 4 was 12,273 crores, which was 3% YOY growth. Full year disbursements were at a whopping 47,600 crores. The industry volumes across categories have grown by single digit during the year. We have maintained stable market share across key categories of commercial vehicle, construction equipment, and passenger cars. We also consolidated our position in tractors as we reinforced our processes and credit underwriting. The asset quality trends have been improving since quarter 3. After the first half, which was slightly weak, the sequential improvement in gross slippages continued in quarter 4 as well. It was 0.74 last quarter, and it's 0.70 in quarter 4. All the vehicles segments except tractors saw a sequentially stable and improved gross slippages. We are refrained from selling NPAs to ARC during this quarter, and we focused on our own collection drives. This, however, optically increases the GNPA ratios. The restructured book in the vehicle finance continues to show a reduction. We started the year with 547, and now it's 119 at the end of financial year 25. And majority of this reduction has come from upgrades and recoveries. Looking ahead, improving fiscal spends, benign oil prices, falling interest rates, monsoon being absolutely fine, I think we should be supporting the recovery in the industry volumes. Let me now get into Bharat Financial. The outstanding loan book is now 38,169 crores. It's down 2% quarter-on-quarter, but 15% and YOY. The microfinance business showed signs of stabilization in quarter 4. The disbursements were up 1.4% quarter-on-quarter. We followed a very cautious approach for disbursements with 94% of disbursements in quarter 4 with the branches with low flows from the current areas and to customers and centers with high vintage with us. We have implemented the MFIN guardrails effective from April 1, 2025. This restricts disbursements to customers with not more than 3 lenders. With large customer base unique to us and our conservative ceiling on clients' overall exposure, the impact of the business has been limited so far. We have disclosed early trends in the delinquency buckets, and they have improved in both stock as well as fresh flows of delinquencies. Now, let me give you a brief of the Karnataka situation. It's improving, and the current book net of the collection efficiency in Karnataka has improved from 96.4% in February 25 to 98.2% in March 25. As a result, the 31 to 90 days past due reduced to 2.3 in March 25, down from 4.1% in December 24. We have also disclosed trend in all standard overdue customers, that's 0 DPD to GNPA, which is heading back to normalcy. The slippages were elevated during the quarter due to the accumulated stress in the earlier quarters and misclassification of certain loan accounts, which was corrected in Q4. Now, Bharat Superstore, that's the merchant acquiring business under the BFIL banner. We have now 664,000 merchants under this program. The book is 7,260 crores, growing at 30% year-on-year. The share of non-MFI book has improved to 19% from 12% year-on-year. The total liabilities through BFIL now stands at 2,680 crores, up 3% quarter-on-quarter, and it has 19 million accounts. Overall, the portfolio stress witnessed last year is waning. As we see the portfolio quality improving in most states, we are cautiously focusing on disbursements in select geographies amongst clients with higher vintage. With the implementation of MFIN guidelines, further strengthening of controls, the Karnataka operations steadily getting back to normalcy, our focus is to ensure disbursement quality, dedicated efforts on collection and recovery, and continued diversification of the loan book. Now, let me brief you about the corporate bank. During the quarter, we let go some of the corporate loans for balance sheet management and liquidity managements. Consequently, our corporate loan book has come down by 16% quarter-on-quarter and 6% YOY. This was only a tactical decision, keeping in mind the short-term objectives of the bank. The overall strategy of scaling up granular and small corporates with selective exposure to large corporate continues to be implemented. The proportion of A+ and above rated customers at 77% has been steady YOY. Slight decline quarter-on-quarter versus 79% of last quarter. But as we go in for some high-rated loans, the weighted average rating was 2.57 versus 2.51 year-on-year. Now, let me brief you about the diamond business. It continues to show healthy growth, the asset quality with no SMA1 and SMA2. While growth is subdued due to weak industry demand, we are liaising with the stakeholders for suitable terms in bilateral trade discussions. We are closely monitoring the developments and are comfortable with the exposures as of now. The gross slippages in the corporate book, which were at 204 crores, mainly contributed by one restructured real estate amount accounting to 140 crores. The full gross slippages for corporate book improved from 44% to 0.44% to versus 0.54% year-on-year. The corporate restructured book also has now reduced to 147 crores from the 583 crores at the start of the year. Our SMA1 and SMA2 book collectively stands at 24 bips versus 20 bips quarter-on-quarter. Overall, while we have concentrated our corporate book during the quarter, we have resumed our disbursements selectively in focus areas, and growth in corporate bank should start reflecting in the coming quarters. Now, let's talk about the other retail assets. Our other retail assets maintained growth momentum with 17% YOY.
All right, so that was the management of IndusInd Bank addressing analysts after their fourth quarter much delayed earnings. We have the executive committee addressing the analysts in this con call. Keep in mind, IndusInd Bank has reported a loss of 2,328.9 crores compared to a profit of 2,349 crores in the same quarter last year. This is almost the first time in nearly 2 decades that IndusInd Bank has reported a quarterly loss on account of the discrepancies that have come to light. Importantly, the management says that they want to start FY26 with a clean slate, which means all of the discrepancies that had come to light, whether that was the derivatives hit of nearly 2,000 crores, the incorrect accounting of interest and fee income, the MFI hit, all of that has been factored into these fourth quarter and FY25 earnings overall. And the intention is to start with a clean slate. Of course, with all the extra provisions that are being made and the reversals that are being done and the hit that has been taken, the bank has reported a loss. There was also a degrowth in the corporate loan book. Gross NPAs have also inched up to 3.13%. But let me quickly bring in Prakash Diwan, who is with us, market expert. Prakash, thanks very much for staying with us. Quick thoughts on the numbers that you've seen. Is it as bad or worse than what you had feared?
So, Ritu, I think the numbers look bad because they seem to be bundled up in these yearly earnings, balance sheet. What's happened is you had piecemeal basis news flow around derivative losses, wrong accounting of interest income, and even the MFI portfolio. All of that probably put together seems to be resulting into the yawning gap on the P&L where they've got this 2,300 crore loss. So, and I'm sure the effective loss would be closer to about 3,000 crores plus. And that's why you see minus 2,300 at the year-end numbers. So the numbers don't seem out of place, won't surprise anybody, but it's the nature of, the announcement that makes it look very big. It's definitely disappointing. And what the bank is talking about, why they've done it, this seems like an attempt at kitchen sinking and saying, okay, we'll clean up things, start afresh. That seems to be the intent. But of course, the numbers are massively startling, when you add up all of those things that have led to this loss.
Okay, we also have Ashutosh Mishra, banking analyst, who's joining us now. Ashutosh, quickly, your take on the numbers before we cut back to that press conference and the fact that the board has decided to call these discrepancies a fraud. What are the implications of that, and do you expect any further hit beyond what has been disclosed?
Because if you look at the latest disclosure by the board, they clearly say that there will be further investigation, and if there will be further investigation, then there will be probability of few more losses coming in. Okay, so that's where I see that the only we will be reliably look at the things once the new management takes place of the bank. And in the call they are indicating that they are sending to the RBI very soon the 3 names, and post that probably investor will able to make the mind over whether everything is behind or not. If we take the example of previously as a Yes Bank out there, what we have seen that over the period of time, few more discrepancies come in even after first level of cleaning up. So in my view, we need to wait for one more quarter before making clearly announcing that everything has been accounted for.
All right, Ashutosh and Prakash, thank you very much for joining in. Unfortunately, that's all the time we had. But IndusInd Bank reporting a loss larger than what the street was anticipating. And as we heard from some of the experts as well, perhaps the fear on the street still remains that the worst is still not behind. This could be a kitchen sinking quarter, but there could be more skeletons that tumble out of the closet. Importantly, the management, the board rather, also reiterating that RBI has given them a deadline of the end of June to submit proposals for the new CEO names, but they're hopeful of doing it before that deadline. So that is one major overhang that remains for IndusInd Bank for now, reporting a huge loss larger than what the street was expecting on account of identifying these discrepancies as a fraud, although the bank continues to say that their balance sheet is healthy with a total capital adequacy ratio of over 16% and a provision coverage ratio of 70%. Gross NPAs inching up to 3.13% and net NPAs at 0.95%. That was the IndusInd Bank earnings. We'll get you more details, but for now, we have to slip into a short break. We'll see you on the other side.